Let me take you to something else, and that is the Star now. It had its annual meeting of the casino operator, and basically the shareholders were told that trading on its gaming floors has again deteriorated. Also, that its future debt funding depends on its trading improving, and that there's still work to demonstrate to the regulator-appointed manager of its Sydney casino, Nick Weeks in particular, but also to the Queensland regulator, that it can be trusted in future to do the right thing. The chair, Anne Ward, said the sale of non-core assets remains a priority to raise cash, that it's engaged with a series of parties regarding a broader corporate sale as well. But the Star's immediate worry is maintaining the confidence of its lenders. Have a listen.
Near-term liquidity challenges and the broader overall financial viability of the business will remain the largest concerns for the board and the executive team as they simultaneously stabilise the business and progress the remediation program along the pathway to suitability.
And the recently appointed Chief Executive Steve McCann, who was previously CEO at Crown, said when he joined in July, the Star was in a precarious position. The risk of losing its gaming licences was high, he said. He also says those challenges still remain.
We have a difficult road ahead, and the Star remains in an extremely challenging position. We have made progress on a range of important issues, have reset our remediation plan and improved our transparency and relationship with regulators. However, revenue has continued to decline significantly, while the costs of our transformation and the cost of the external assistance and advice that we've required have continued to be at inflated levels.
As shareholders hit the chair with a first strike on the remuneration report, and also the board with a clutch of searing questions, including this one, perhaps the most blunt of all.
Is the company going into voluntary administration and then on to liquidation due to administrative negligence?
The directors have formed the view that the company can continue as a going concern. That's explained in detail in Note G to the financial statements. But continuing as a going concern will require us to be successful in relation to a range of matters, and they include meeting the various conditions precedent to secure the drawdown of the new debt, securing additional sources of liquidity, further progressing our plans for longer-term funding, implementing cost reduction plans that we've outlined, completing non-core asset sales, and continuing to progress our remediation plan in order to regain suitability.
But given the company today reported a further deterioration in its trading and that the confidence of lenders partly relies on that improved trading, the Star clearly is a very long way from being out of the woods.